In this episode, I'm going behind the scenes to share how I do bookkeeping as a rental investor. This is the most important part of rental investing that no one is talking about. But if you get it wrong, it can get you into trouble with your taxes and with your overall business. So this is something you need to get right if you invest in rentals, and I'm going to show you how. Welcome to the podcast, Real Estate Investing with Coach Carson. I'm your host, Chad Carson. You can also call me Coach Carson. And this is a show to help you get out of the financial grind so you can spend your time doing more of what matters. This episode was actually originally recorded on my friend Michael Zuber's channel, One Rental at a Time. So thank you to him for letting me share it with you. Let's get started. Because having good numbers, I compare this to everybody's either heard of or seen the movie The Matrix, where Keanu Reeves is a cool guy who's dodging bullets and everything. But the coolest thing is he sees the entire world in numbers, and it slows down. The whole world slows down for him, and that's what I look at when you understand the financials of your business. Literally, you can see your entire business in numbers. That's the way the pros do it, the corporate people, but also the small, mighty investors. They see when there's good things happening. They see when there's bad things happening. And then those numbers can tell you when to jump in and solve something, fix something. They can tell you when to do something better. So I want to unpack, and I want to hear from you because I know you're a pro and you're doing this too. I like to compare notes, and I want to share with people just kind of a higher level of what my financials look like, how I track them, why I do it, how I do it. And then in the future, we can unpack it even more.
Yeah. So when I think about this, right, when you're just a W-2 employee, your taxes are kind of easy, right? You can almost do it yourself, which I wouldn't do that, get an accountant behind you. But anyways, but once you start running a business, which being a landlord is, the numbers, it's all about the numbers. And oh, by the way, you got to be able to track them, right? Because you're reporting to the IRS. But really, when you get the numbers right, in my mind, not knowing where this conversation is going, is I can go back to day one of my books and look at how different buildings have performed, right? Usually I'm buying junk. So the first year is heavy capital investments. Then after year 2, year 3, year 4, and I can start to see issues or challenges. And one thing Olivia and I have done over the last, I want to call it 2 years, is we've taken the worst performing property. And again, it's not worst performing of the year, but of probably the last 5 years. And we've sold it. And what we've seen just by getting rid of the worst one, which for us was on Glen, it was a triplex on Glen, we sold a building. Our cash flow went up.
There you go.
Kind of a problem property, I would think, right?
Yeah.
And then just last year, we sold a property we called 10th. And we're doing our numbers now because we're recording this in February, our appointments early March. So I have a feeling the same thing will happen. So when you look at these, I think you break them down into 3 buckets. How do you see the world?
Yeah. The first one is the one everybody thinks of and talks of, and that's all they focus on, is doing your taxes. And it's important. Like there's no doubt about it. You have to do it. There's only 2 guarantees in life: death and taxes. We've heard that one. So you have to do this. And so when you track your numbers for your properties, you're basically putting a historical record of the income and the outflow from your business, the income, the expenses, the purchases you make, and you have to report this to the IRS. So there's 2 categories of things you need to be thinking of within that first bucket of tax data. Is number one, you need to just track it somehow. And I do this in a couple different ways. I now use QuickBooks to track all my business. That's a software. There's other.
So let me ask you about that. Do you? I'm guessing by property or by address. I'm guessing.
Yeah, the good thing about QuickBooks is really versatile. You can track every income and expense. There's a category for every one of those, but then there's also something called classifications. And so every property, you can assign a class and just describe it: 123 Main Street, 123 Maple Street. And so basically you can do a report that says all the income and all the expenses for your entire business. Or you can do another report that says, give me a breakdown just for this one class, just for this one property. That's where it gets so really useful. So every time you enter a check, every time you pay a bill, every time you make a deposit, you can have a little button that you click, make sure I have to put a class on there, or otherwise it won't even let you close the window.
I like it. Yeah. You got to associate this with something. Yes.
Yeah. Yeah. So
I like it.
that's,
Okay.
yeah. Yeah. So, I mean, there's a lot of, that's the nitty gritty work of putting in your books. I've hired bookkeepers in the past. Right now, I don't have a bookkeeper. So
Mhm.
my 2024 to-do list is to get a bookkeeper, because I've been doing this for myself for the last couple of years. Even when I was in Spain, that was the 2 hours a week that I worked, was uh,
Okay.
doing bookkeeping. But the point is to have good books, you need to accurately track what happened, the income and expenses. But then also you have to have, in case you get audited, you need to have proof of those
Oh,
expenses.
yeah. Having gone through an exhaustive audit that took 13 months, you are absolutely right.
Oh boy.
If you can't give proof or whatever, I forget what they had a word for it, but I'll just call it evidence. If you don't have evidence of it, that's coming out. So have evidence.
Yeah, that $5,000 expense that you thought you had and you forgot the receipt, they're going to say, well, prove
Well,
it.
gotta go.
Where to go. So now you
It's
have to pay
on you at that point. Yeah.
taxes on that $5,000. So it's
Yeah.
as if if you made a profit 3 years later and you have to pay taxes on it. So
Hmm.
the point is that's just a discipline. Like that, this isn't something. This is like getting your teeth clean, going to the doctor to annual physical. Like nobody's like, I love doing that, but you got to do this stuff for your taxes because it's part of life,
Yeah,
right?
and again, this is probably because I was an accountant out of school, right? So I was in the debits and credits, and I did general ledger accounting and all of that. So I always looked at actually told my CPA this. I said, I feel like I'm going to my dad to show him my report card. So I look at the tax years. It's my report card. How do we do? And the only way to really know how you do is to take care of it every day. It's you don't want to go to your tax guy with a box of receipts saying figure it out, because that's not a good idea. You got to have the discipline weekly, monthly at the latest. So yeah, to me it was always, hey dad, here are my grades. How'd we do?
Yeah. Yeah. And, there's also a lot of sloppy investors who just think, well, I'm just going to have this vague thing. And if I don't know what's going on, then neither will the IRS. And wrong. Like that's not good.
Wrong,
But
wrong.
the other problem, if you have good books, your CPA can help you as an advisor and say, hey, there's a legitimate legal way to save taxes here. There's this new tax law. There's this new thing where you can deduct more things in one year. So like having good books gives ammunition to your tax advisor to then save you money. Like you can pay for the CPA's bill every single year if you have some good tax planning. And that's what
Yeah,
having good books allows you to do. So there's a selfish reason. It's not just I like
I
the
agree.
report card metaphor, but it also can make you money by being a smart tax investor.
No, I totally agree. And like you said, kind of in the opening, that's the one that everybody thinks about, which means the next two probably get ignored. Where do you go next?
Yeah, these are more important. The taxes are just what you have to do. They're like going to the doctor.
Well,
You
the
got to do it.
taxes. Oh my goodness! All right, let's
Yeah.
go.
So the second one is they're called KPIs, and you've been in the business world. You know what
Oh
this
yeah,
is.
yeah. Yep.
KPIs are your key performance indicators, and
Yes.
every business worth their salt has these. For me, what this looks like, this is the kind of an ongoing process for me. I started it a couple years ago. I actually do it in my Coach Carson business more regularly than I do my real estate business. But this is where every single month you pick just 5, 6, maybe most 10 stats in your business that are the most important stats. Think of this like the pulse. If you were a doctor or a nurse, you're going to
Mhm.
take your pulse on your patient, the vitals on your patient. These are the vitals of your business that if you track them consistently and in real time, that's the key, then you can tell the health of your business. And so for me, that's just critical. That's like me. So I look at the amount of money coming in. So the gross income, the total rental income for my business for the month. And I have a number. I said, this is what I should be getting coming in total, not by property. This is the total money I should be collecting on a monthly basis. And this is the standard. And if I'm below that, what's wrong? What happened?
Mm.
If it's above that, okay, that's good. And so most of the time, 99% of the time, it's just like, oh, normal month, good. Let's keep moving. But every
Mhm.
once in a while, there's like, why am I 20% less on my gross income than I'm supposed to be? Now I'm looking at the report. Then I dig into the reports that the property manager gave me. Then I ask questions. Then I might realize, oh, we've got 5 properties that are vacant. And why are they
Mm.
vacant? And how long have they been vacant? And so this is the matrix. This is the matrix stuff. Like if you see the
Yeah.
world in numbers, that one number in 5 seconds can say, alert, alert, you got something going on in your business. Dig a little deeper. And I do that both with the income, I do it with the expenses, I do it with the cash flow.
Mm.
Those are my big three. But
Well,
it tells me.
let's poke at that a little bit, because there's so many things that you bring to the table that could go deeper. Let's talk about that. You said revenue or income, expenses, cash flow.
Yeah.
That third one is actually the most. It's like oxygen.
Mm.
People don't realize that you could go broke with high income and low expenses in theory if you have a mismatch between when cash shows up and when cash goes out. Cash flow, like, how do you watch? Like, let's talk about that third one because cash flow is everything, but almost nobody, like, I could ask most people, how much do you make? 90% of people can give me a number. If I tell people, how much do you spend? Probably half people could give me a rough estimate. No one, probably other than you, could tell me what your cash flow is. So let's talk
Right.
about that.
Yeah, your cat. Here's the big idea to remember. Category number one, taxes. It might say that you made a profit. Let's say it told you made a profit of $100,000 last year,
Yeah.
but you could have a zero cash flow and have a
Yeah,
$100,000 profit. Let's tell people how that
absolutely.
works. How is that possible? How is it possible you made $100,000? Let me tell you how. Number one, every time you pay principal on your loan, let's say you pay $500 in principal one month, that is technically profit. You did, it wasn't an expense. You paid down
Correct.
principal.
Yep.
But guess what? Who got that cash flow? Did you get it, or did the bank get that cash flow?
Yeah, it's a negative
So,
on yours. You're
so
down 500. Yeah.
you're down $500. So let's add, multiply that times 10. If you have 10 properties, 10 times 500, you just made $5,000 this month, and you made $60,000 for the year, and you might have been negative on your
Yeah.
cash flow.
Yeah. That 60 grand is a negative, right? It's a forced savings. It's a this, it's a that, whatever you want to call it. But on your taxes, it looks all good.
Yeah,
But no, this is why cash flow is the one.
cash
And
flow is key. Yeah,
yeah,
and the reason I started doing this, Michael, was like back in 2016, 15, I was still recovering from the Great Recession. And actually, I tracked this cash flow. I say that I just did this the last couple of years. I've been tracking cash flow for years and watching my bank account, mainly because I
the
wanted to
necessity.
survive. I said, crap, I'm not going to survive for the next year in my business. I
It's
better
the
watch
important
this
part.
cash.
A lot of people are income and expenses. It's the cash flow, folks.
Yeah.
And there's a balance sheet, there's an income statement, and then there's the third and never talked about, but most important, cash flow statement.
Yep.
The game, cash flow, right over here, just coincidence.
I love it.
It's
Yeah.
about cash flow.
It is. And if you want to survive in your business, so I track it every month. I know. And so first it was survival, but then once I moved into like kind of the harvester phase, like I talk about the third phase where you actually want to live off your income.
Yep.
Everybody talks about building wealth with real estate. I know very few people. You're one of them. I'm one of them who actually live off their income and say,
Yep.
hey, this is something I can just live off of. And the way I do that, the number one thing is watching my cash flow. And I watched it for years and said, okay, I finally feel confident. My business partner and I, we didn't pay ourselves a lot of cash flow. We paid ourselves like a $3,000 dividend for a long time, even when we're making a lot more money than that, because I wasn't confident that the business could distribute that money until I tracked that cash flow for a long period of time and said, okay, even on the downs, even when we're our low point of our cash flow, because it goes up and down,
It
we could
does.
we could still raise our dividend or equivalent of a dividend and pay ourselves more money. And so that was 2017. I took a deep breath. I started paying myself more money and I moved to Ecuador for a year, knowing that I could actually survive off of it.
That's amazing. I love that. What do you got for if you did number two was awesome. What's number three?
Number three is you talked about it a little bit earlier, is the strategic chess match of rental properties,
Yes. I
is
love that.
understanding your numbers. You go back in time and you say, here's a historical record of this one property. And I think what what I've coached a lot of people over the years. So many people think they say, I made a lot of money on this property, or I did really well on this property. And then I dig into the books with them and I say, no, you didn't. Like
No, you didn't.
you didn't make money on that property. Show me. And
Uh,
this is the truth. Like we have to look at the historical record of our property to really understand if it did well, if it didn't do well, and for us to be able to make strategic decisions with each property. Each property is like a chess piece. And so you said earlier you had that triplex that was not a good performer. This is what I do. I make a spreadsheet of all my properties over time using the QuickBooks data, and I will rank them and I'll say these are the ones doing really well. These are the ones I like.
exactly. So
The
far,
ones
where
that
we
the
do the
ones
same.
that
This is identical.
exact
I love this.
highlight. The ones I wanted I call it pruning, or I used to call it like culling the herd. I had
Oh
like
yeah.
a list of properties at the bottom. Like I got to cull these properties.
You
Like
got to keep you know how
it's
you
not
keep a
working.
healthy tree? You trim it,
Mm-hmm.
right? You trim it. And I mean, just for example, one of the things, I mean, this was probably 5 or 6 years ago, but one of our properties, we saw the water bill go up. Started gradually going up, And then over a couple of months, there were some big spikes. There was a significant water leak that was not reported, right? I mean, that's just one example by watching that. And if we were just looking at the cash flow, we wouldn't have noticed it because rents went up and kind of would have hidden that. But one of the things that I do in this strategic chess match is I will take all expenses on a property that have more than 3 years of history, and I will chart it out. And when you chart it out, the lines kind of all look the same. But if there's like one spike, it's like, oh, I better look at that thing. What was that?
Yeah, graphs are so helpful. I'm a visual learner, so when I see that red line, the spike and go up, or that gap is what's important. That's the cash flow gap. That's the gap between your expenses and if the rent goes up, it kind of bails you out. But maybe your property taxes have doubled in 3 years, and your town is going broke. You need to know that. You need to know these kind of things.
And then you could do capital expenditures. Again, one of the things, going back to number one, working with your accountant, especially if you're a W-2 employee, you can't carry forward your loss if you make over whatever that number is, 250 or whatever the number is. So sometimes you're going to do it as a capital expense, so you stretch it out. Sometimes you'll have the option to make it an expense in the time. Again, talk with a CPA. But these are all the chess matches. And again, not enough people talk about cash flow. It is the blood of a business.
Yep.
And I love that.
Final piece, Michael, I would say this is in the chess match still, but one of the best things I've done, and one of the reasons I started making my YouTube channel, I started drawing these little analysis of a property, was I learned a lot of data. By paying attention to the data for my actual properties, the winners and the losers, I was able to then model my next purchases, be more accurate with my next purchases. I was able to be a better investor in the future. So this is about the future, not just the past. You can actually learn from it. And so
I had not thought about that.
Yeah. So the models of what's a good deal, like for example, I made a video that's coming out here in a couple of weeks where I'm showing how to analyze a single family house. And I shared some of my data. I said, hey, across all of my properties, I've averaged about 15% in maintenance and expenses. So 15% of the rent has been the average maintenance and expenses together.
Now, what was the duration? Was that 5 years of history, or what was that?
I've had, that was about, last time I looked at it was about 15, 16 years.
So I just want people to realize how rich that answer is, right? So for 15 years, you've been collecting this data over all of the units. You then put that in a master thing. You divide by the unit count, and your historical average for a year is 15%. By having that, you became a better investor because you will use 15, or maybe you'll use 17 to give you a spread, but it makes you a better investor because you have actual data.
Yeah, exactly. That's real. That's real numbers. And that gives you confidence. So when you're making an offer to someone, you're not just saying, I think it's that. I think it's that. It's like, well, no, I actually own a property in that neighborhood, and the expenses were that on that property. You now have unfair advantage over other people because you have real evidence, you have real confidence, and confidence is the currency. Confidence is what makes you a good investor. It allows you to walk away from some deals that are just not good, and it allows you to make an aggressive offer on other deals where you're like, all right, I know what this could do. This has got a lot of potential because I've tracked another similar property nearby, and I think I could do just as well on this one. One thing about bookkeeping that I didn't cover in this video is how to figure out how much taxes you pay when you sell a rental property. But my next video goes into a lot of detail and shows a case study of how you actually do that, and it shares a free spreadsheet if you want to figure out how much taxes you owe on your own rental property. So check that video out. I will warn you that a lot of the comments have been shocked about how much taxes they actually had to pay, but it's better to know up front before you actually sell the rental property. So check that video out. It'll be above me here and also in the video or podcast description below.